you're getting paid this yield because you're selling some risk. So it's not free money that comes out of thin air. You are taking a financial position and taking a view on the market.
All right, everyone. Good morning, good afternoon, good evening. What is up? I am your host, Charlie Shrem, and you're listening and watching another epic episode of The Charlie Shrem Show of Untold Stories, where twice a week together we get to dive deep with some of crypto's most influential leaders to truly understand how this movement came to be. I'm your host, been around this space, this industry for over 10 years, started some of the craziest companies, did some of the craziest things, a lot of fun along the way, met a lot of amazing people, and this podcast is where we sit for 45 minutes and we talk about kind of the conversations of the day, but also more importantly, I want to understand things, education and entertainment. I want to learn things. I want you guys to learn. I want us to all have fun doing it and laugh. And I want us to be smarter than our friends. It's simple as that. I want us to be able to talk about these things with confidence because I'm shaken too. I mean, it's been a scary few weeks. Yeah, I know I've been through a lot of these bull and bear cycles before, over 10 of them. I've seen Bitcoin go from $1 to crash till 10 cents. I actually lost almost all of my early life savings uh, buying Bitcoin at $32 and watching it crash back down to 6. And luckily, I kept a few of them after selling it. But there's a lot of really cool topics today. I want to focus on like kind of what's gonna really bring us to the next wave, and I really think a lot of that is based on the products that people are building now. Uh, and to talk about it today, let me welcome my guest, Julian Koh. Thank you, Julian. Thank you so much for coming. It's late for you. It's evening. You should be out with your friends, but instead you're with your friends here on Untold Stories. Thank you.
Yeah, no, I am excited to be on. Part of my job is doing a lot of these podcasts. So yeah, just very happy to do this. I've also been following you and your show for a few years. So yeah.
Thank you. What's cool is that whenever we're about to get into a show, I always like to Google the person's name, but in my own Gmail inbox, because I feel like I've spoken. You can't even believe how many guests will be like, yeah, we met, or I spoke to them 10 years ago about something, or they were working at some other company before. But actually, before you and I met today, uh, I have emails from you going back 3 years from medium.com because you were writing a lot on Medium about some very, very good subjects about yield, Tendermint, Cosmos, and things like that. And Medium was actually recommending them to me as posts that I would enjoy reading. So thanks for upping my education in 2018 and 19.
Yeah, no, that's interesting. I think back then I was still like in university. So I was just like on the side, writing, learning as much as I could. And thankfully, a lot of these like blog posts sort of went viral-ish in like the bear market of last cycle. So I'm happy to see that Medium, the Medium algo helped to promote the stuff
Yeah.
beyond my direct reach.
Okay, so that's actually a great. I'm really happy you brought that up. That's like a perfect subject that I love diving into. Um, Here you are, you're the co-founder and the CEO of Ribbon Finance. I want to talk about decentralized finance in a little bit. Talk about yield. I really want to spend some time on that a little bit later. You were software engineering at Coinbase, one of the top companies in the space. You worked at Metastable Capital as a consultant, but like you said, in the last bear market, you were at Cornell University. You were writing these blog posts. Do you remember? I know it was only a few years ago, but do you remember like ever thinking to yourself, will there be another bull market? Like, why were you willing to enter this space during such bad times of 2018?
Yeah, I think I mean I joined this space in sort of 2016, 2017. So seeing that whole ICO boom was my first cycle. And I think I was like a freshman in university. I was maybe too naive to think about I don't think I was like I didn't have like the level of like cynicism that maybe I do now that I just had this naive thought that okay, obviously there'll be a new cycle. A lot of this stuff is still very interesting. I didn't have any other like huge interest outside of crypto at that point in time. So maybe you could call it like luck or a bit of faith. But yeah, I think I just felt from a gut feel that stuff would get better in a few years. And yeah, I just thought, learning all this stuff was really interesting. Just reading about different like consensus algorithms, like learning how different blockchains worked at a very fundamental level. I think I got sucked into the ICO hype as well in 2017. Obviously, just trying to make money and do all that kind of stuff. But what really kept me going after that was like just learning this stuff. It was very, very interesting. So yeah, I never really thought about like, is there actually going to be a next cycle or not? Although I do think like nowadays people this is like coming up again in a lot of like crypto Twitter circles about, is it over and all that. So yeah, I find it quite interesting. I feel it doesn't feel the same as 5 years ago.
It looks like excuse me. It looks like out of the drama of over like 10 centralized what do we call them? I don't like calling them exchanges, but I've been using them for so long, like companies that custody centralized companies that custody user funds. Let's call them, I guess,
Crypto
exchanges.
banks,
Sorry?
crypto
CeFi.
banks,
Yeah, crypto banks. Okay.
CeFi.
Well, the word bank implies like a banking regulation, which I would be okay with if there was some similar banking regulation frameworks around, let's call them CeFi, centralized finance. We would be looking in a very different world today. But unfortunately, most of these, other than Coinbase, most of these CeFi companies are like jurisdictional hodgepodge, between the Bahamas and UAE and Delaware, and it's just like all this craziness going on. I don't want to be a user holding my money in one of these places. I'm not even going to bring up a story about what happened last night to me. I was like, I'll tell that story in a little bit. I was like bombarded by people asking me what's going on, and I wasn't expecting the conversation. My wife had to like come and be like, "Don't bully my husband," but it's like craziness in the crypto world right now.
Yep. I think I was also affected by the FTX stuff personally, unfortunately. But it's just like so crazy and like unfathomable that, this company which had all this social legitimacy from every single big name VC and like celebrities and like regulators, like they were the worst actor, which is just like ironic. But I suppose it's like a good reminder that, the core principles of like not your keys, not your coins,
Yeah.
it is sort of like a timely reminder because people have forgotten that over the last like 5 years.
So I mean, I wanna talk about real yield in a little bit because that is something so real, and I feel like that's been left behind. And now decentralized finance is seeming to be like the biggest winner from all these collapsing decentralized finance. But let's talk. I want to kind of go back in time, and let's go back to like 2016, 17. We're in the ICO boom, and Uniswap is invented, and that was like a huge technological advance for DeFi. Why? Why was that like next level for this decentralized finance?
Yeah, I think obviously when Uniswap first started, it was really much more like a toy. I think even I was like pretty bearish on it. Like, okay, why would I use this when liquidity on Binance, Bitfinex, all these exchanges were just so much better? And I think really when the bull market somewhat came back, there were all these new assets that just got created all over again, and these centralized exchanges were just too slow in listing them, getting market makers, building up liquidity and all that. So that was really like Uniswap's best opportunity to just grab as much attention and market share as possible. And I think, over the years, nowadays they are like Uniswap itself is really competitive on like ETHUSD pairs. So they've gone from being used for shitcoin trading to, I mean, they do the same volume as Binance for
Yeah.
like the majors. So definitely seeing it grow from like a toy to something that actually works now.
And so now you have Ribbon Finance and you have dozens of other, uh, uh, would you call them like suites of DeFi protocols out there? Your volume is growing. And this has all been going on in the background. You know, CeFi used to not do what DeFi was offering. DeFi did it first, right? Like DeFi
Right.
offered yield. You wrote a blog post in before FTX even, you know, you have a blog post from 2 years ago about yield, but people have been writing about this idea, and the simple idea of depositing two different type of tokens in a Uniswap pool and earning a piece of the spread because you're putting your tokens up at risk. It's not a new idea, but it's novel to be able to do it in a decentralized way. During those years of like 2019, 2020, it would be like we saw DeFi explode, right? DeFi exploded during that bull market. So I guess my question is, CeFi never did what DeFi did. I know with the acronyms, everyone's probably going crazy, but decentralized finance protocols were doing it. Companies like Coinbase, Gemini, Bitfinex weren't doing, lending, liquidity pools, vaults. It wasn't until some of these ones that collapsed, like Celsius, Voyager, and FTX. Why did they start doing DeFi, and why did people go there? Why was there $16 billion in FTX but not in Ribbon Finance?
Yeah, I think we have seen like a convergence between like the CeFi players and DeFi players in like the last 2 years. I think, first the users of these major DeFi protocols, Compound Finance, Aave, MakerDAO, these were all mostly used by crypto native folks. So maybe in 2018, 2019, 2020 is mostly DeFi native folks. And I think once sort of 2021 hit, all these sort of centralized players just realized, look, there's all this economic activity that's happening in these DeFi protocols. Plus, these DeFi protocols are giving us free tokens to use their platform. Why aren't we just like taking all our customer funds and putting it there instead? So I think, Celsius and Coinbase, FTX, or a bunch of these other exchanges, maybe they used to just not do anything with the customer funds, keep it safe, but they just saw this as like a really, really attractive opportunity for them to be sort of like this middleman between retail users who don't know how to use DeFi, and they would sort of take all their money and farm the heck out of everything in DeFi. So yeah, I think a lot of them just saw the opportunity to like bridge that gap. I think it made sense from like a business perspective for them. And interestingly, after all these companies collapsed, like we just realized like, oh, actually so many of these DeFi protocols were just like, most of the users actually came from these large players. So it's a little bit ironic in a sense, but yeah, I think having those companies bridge the gap between, their regular retail audience and getting them into these DeFi protocols was like a huge growth driver for DeFi.
When there was like a huge term for it, like yield farming, right? Liquidity, liquidity mining, yield farming. I like that. I was like, well, I'm decently good at this, and this will probably be like a niche job inside of crypto. It's not easy to do, but it's if you work enough, if you learn enough about it and understand the different chains and the risks, that keyword risk involved, you could properly, do DeFi and yield farm and make a little bit of an income off of it as an individual, maybe a small business. And a lot of people were really doing that, and that's like I called that like DeFi summer. It was this huge flourishing of all these DeFi protocols. It's like farming, right? You could. It's not a hard concept to understand that you could put seeds in the ground and grow food, but we all know that that's not as simple as that. We leave it to the professionals. But there is money to be made in doing agriculture and ranching and things like that, especially if that's what you like to do and whatever. But tokenizing farming and then doing it at $16 billion at scale without any risk or, that's kind of, it seems like what happened.
Right. Yeah, I think, it sounds all good in theory, but because these decisions of which protocols to use, how do we spend the money was really in the hands of like, I don't know, 5-10 people. There were occasions that we saw like very weird stuff happening. For example, I think there was this story of one of the guys who managed like the Celsius balance sheet. Like he just took some of those funds and bought a bunch of NFTs of like like random NFTs. So, his job was to take those customer deposits, generate a yield on it, but it ended up being a bunch of random stuff. So I do think it's because I think people just didn't care about controls of what they were allowed to do with customer funds. It just ended up becoming like a mess really quickly.
So let's keep getting into this. So you have Ribbon Finance, and one of the really cool things about DeFi is that you go to any of these really cool protocols, you go to ribbon.finance, which I'm going to go over there right now, and as a yield farmer, because now we're all yield farmers, one of the jobs you have to do is understand risk, understand lending risk, understand when you're looking at these, like you have your USDC or your USDT or your Bitcoin in some instances, you have your crypto, and you want to deposit in these vaults because they're offering attractive APYs. And you go to these places and we look we look at, like, some of these are offering higher APYs, some of these are offering lower APYs. One of the things that we have to do, and I'm going to ask you how in a little bit, is when we have to figure out risk. We have to figure out some of these places it's going to be higher risk, some of them are going to be lower risk. Wow, Ribbon Finance, you have a lot of stuff going on here. This is really cool. So I go to app.ribbon.finance and I'm a yield farmer. What am I looking at here?
Yeah, so how we describe ourselves is we are like the first and largest structured products protocol in DeFi. So what that really means is we offer these products that do a bunch of complicated derivative strategies under the hood. And for users, it's sort of really easy. We abstract all the complexity away for users. But then obviously the question is, okay, sure, this is the yield that we are hoping we'll get. What is the risk? And I think for us, we make it very clear that our products are not this risk-free high APY thing like some of the Luna Terra stuff. I think we make it explicitly clear, like, you are getting paid this yield because you're selling an option. So the reason why people want to use this in the first place is, let's say you're sitting on 100 Bitcoin or 100 Ether or something. If you stick it in a lending protocol like Aave or Compound, the lending rates for these crypto assets are generally pretty low. So I think if you look at like Aave, the Bitcoin rate is maybe 10 basis points or 20 basis points a year. That's mostly because, people want to borrow dollars. They don't want to borrow Bitcoin. So naturally the rate of lending those Bitcoins are pretty low. So what else can you do with your Bitcoin? I think exactly. So one interesting thing that we saw in 2018, 2019 was in Asia, there were a lot of these like brokers that were selling these yield products to Bitcoin miners, especially. Bitcoin miners have so much Bitcoin, they don't know how to generate yield with it. And a lot of them were, experts in electrical engineering. They were experts in like infrastructure, but not necessarily sort of the finance side of things. So these brokers would come in and sell them these structured products where they'll say, if you own 1,000 Bitcoin and you think Bitcoin is not going to go up by 50% in the next month or something, if you think Bitcoin is like just going to range for the next few months, you can actually monetize that view. So you can sell a call option against your Bitcoin that basically says like, hey, Bitcoin is 17K now. I don't think Bitcoin is going to go beyond like 20K in the next 2 weeks. So I am willing to sell all the future upside in case it goes above 20K. And you get paid a premium upfront for that. So all this is, if I sort of told you how that works, it might be like pretty complicated for you to go and execute yourself. So our main products is we just help you do this over and over again every single week.
So you'd have to understand like a strategy, like a covered call. So you go here. What's really cool about this, and I want to, this is really good, valuable lessons to be able to, because DeFi is amazing and DeFi is very safe as long as the protocol itself doesn't get hacked. But there's nothing you could really do about that as long as you're sticking to the top like 10 protocols and blockchains. but I want us to be able to understand the difference between like depositing our money and using DeFi and then using CeFi. One of the problems with CeFi is that these places can basically cut off everyone's withdrawals. Here, everything's happening on a smart contract. Your user application that I'm looking at with the colors and the designs and the graphics is merely just an interface showing what the contract is doing, but the contract itself handles the depositing, the withdrawing, and the actual strategy. And what's cool is that you kind of go into what the strategy does. Here I'm looking at the wrap BTC one. And what's interesting is that you actually cap the capacity at only around 750 Bitcoin. Why are you capping it? If you have an amazing strategy and people are making a lot of money, wouldn't you want like unlimited amount of people?
Yeah, I think initially we did these things as just a way to control like the inflows and outflows, so we don't have like a surprise 10,000 BTC deposited or something crazy. So yeah, I think we generally want to grow in like a sort of steady pace. So we just set these caps when people deposit Bitcoin and the vaults fill up, then we increase the caps. I think it's just helpful for us to sort of make sure things don't go out of control too quickly. So yeah, I think that's sort of something we've been doing since the beginning, and we still do that today.
What yield number scares you? Okay, so basically when you're talking about yield, you have to already be long the token. And that's what I explained to people. I said, "What tokens are you already holding?" And they tell me this one. Let's just say it's AVAX. And I say, "Okay, you can if you're already holding or long a token, then there's great ways to get yield on it and keep it in a smart contract where you're still maintaining your keys or the contract is, but you could be getting 10%, APY a year. So something like that, where does the yield come from in that sense?
Yeah, so maybe for Ribbon specifically, as I mentioned, the yield in our case, in some of these DeFi protocols, it's like totally unclear where the yield comes from, and I think people should just generally stay away from things that they don't understand. I think for us, it's very obvious. You're getting paid a yield because you're selling a call option. So you do have some risk. So let's say, in the example that I gave above, you hold one Bitcoin is currently 17K, and you sell a 20,000 call option. If Bitcoin goes to 30K tomorrow, like you'll still only have sold the Bitcoin at 20K. So you would have given up all this upside. But what's the chances of Bitcoin sort of doubling in the next few days? It's probably pretty low, especially in this type of environment. People feel like the markets are not sort of primed to do anything crazy anytime soon. And because you are expressing this market view, you're selling like a real call option against your Bitcoin. That is you're really selling a risk and you're getting paid for that. So I think in our case, it kind of makes a lot more sense of like you're getting paid this yield because you're selling some risk. So it's not free money that comes out of thin air. You are taking a financial position and taking a view on the market.
That's really interesting how that works. Wow. I'm really impressed by all this. And then kind of the next level of this is you have all these uh, DeFi protocols, but the governance is not owned or run anymore by like individuals. It's now a DAO or like voting shares. Do you guys have that as well?
Yep, we do. So we started this about the whole project is about 2 years old, and we launched like the DAO officially like a year and a half ago. So it has been going on for quite a while now.
How many users are we talking about?
I think the last time I checked, we had something in the range of like 10 to 20,000 users. Some are big, some are small, but that is sort of like the headline number.
Do you have like a powerful community?
Yeah, I think one interest. I think maybe we were lucky, or maybe we just took the right actions. But yeah, we seem to have like a pretty sticky community. that some of them are intellectually interested in this type of stuff, so they stick around for more than just like whether their coins are going up or down.
That's a really good point because in other industries, people are like, "What? I don't understand this whole community aspect. Like, why would someone want to join a chat group of like an application that they're using?" And I'm
Yep.
explaining that. I'm explaining that most people are just very intellectually stimulated by this technologies that we're building out because it's so new. And it's like every day, it's like, oh shit, we just came up with something new or invented something new. Um,
Yep.
there's a lot that's really exciting about the future. But going back, so last night I was just at a friend's house and there was a bunch of people that I didn't know, and I got like a bunch of people kind of were asking me about the whole FTX situation and about Bitcoin and crypto, and I just kept saying, I'm like, yeah, I'm just really sad. I'm just really sad about what happened, and
Right.
that's just kind of how I feel because uh I don't know. It's like almost going through like stages of grief, maybe. But I guess the way to doing this show maintains my excitement, of course. Talking to you, being able to talk to the listeners, feedback. Oh my God, I hear Uber drivers all the time tell me they listen to the show. People, anyone like the. I love the feedback. I'm probably going to rename the show the Charlie Shrem Show because I meet some really amazing people that I want to bring on. That's not just related to crypto, but getting back to what keeps me going and excite me is the future of this because I really do
Right.
believe that in the future, everything we do, everything we touch will be a blockchain, a protocol, a DeFi, something down the road. What are
Right.
you building? What do you have like on your long-term roadmap? What do you want? What do you want to be able to launch in a year from now?
Yeah, I think like the this recent FTX incident sort of just strengthened our value proposition a lot, I think, because if you put your funds within FTX and maybe you use one of their yield products, you have no idea where the coins are. And people didn't care about that over the last few years. Maybe people forgot about these what counterparty risk meant. People thought SBF was like a good actor, but now people are sort of very aware of, okay, we actually need to know where our money is. So all these exchanges are posting like proof of reserves and all this stuff.
Yeah.
And I think using a protocol like ours is awesome because people can literally just click into the Etherscan link. They literally see all the Ether or all the red Bitcoin sitting in that contract. They can call the contract and look at how many tokens are sitting inside of it. So it's sort of as if these products have proof of reserves by default. And I think that'll be just a much stronger value proposition than, using one of these like opaque custodians or one of these opaque crypto banks that sort of take your money and do a bunch of random stuff with it. But yeah, back to what we are building. This was like our core product for the last year or 2 years. We've been working on like a new project in stealth for like the last 6 to 12 months, and I think we are very excited for it. So it is called Aevo. It's a decentralized options exchange. So we think the crypto markets have moved from spot markets to derivatives, and particularly in the derivatives markets, people are trading like futures, especially like these perpetual futures. And we think the next leg of growth is not going to come from these futures, but it's going to come from a bit more complicated products such as options. And we think the market's sort of ripe for someone to actually build like the best options trading experience in DeFi. And we are trying to position ourselves as that. So we announced this about a month or two ago, and we are hopefully launching it in the next month or so.
Congratulations.
Thank you very much.
You need to really get more. This is exciting, but get me more deep into this. Why do you think options are the future? It sounds like there's a little bit more. Isn't there like redemption risk where how do you redeem the option for the actual underlying asset?
Yeah. So maybe stepping back a bit, like why we think options are going to be an important part of the next wave or next cycle is because we think, in this year especially, the bull market has really hit all of us pretty hard. We have seen like these volumes of all these perps on all these
Yeah.
exchanges. I think it has collapsed sort of 50, 60, 70%. But interestingly, like the open interest on these options contracts has like steadily grown.
Excuse
So
me.
just like a month or two ago, like the open interest for ETH options was actually at all-time high, even in like the depths of a bear market. So I think we just have like pretty strong evidence that the market's getting more sophisticated in general. People are trading these things more and more and more. And I think maybe a bit more like of a macro shift is, it in like the world of TradFi, retail customers are like Robinhood traders are getting really sophisticated. Robinhood traders they know how to buy these GameStop calls and stuff like that. So we do think there's just like a broad shift for retail customers to become more and more financially savvy. And yeah, we think if or when they come back to crypto, they will want to trade options because that's what they've traded in on their Robinhood app. So yeah, that's why we're sort of bullish on the whole sector, and we're trying to position ourselves as like the leading product in DeFi that offers this.
Yeah, if you look at actually, I'm looking at the numbers now, monthly DeFi volume and growth, and it looks like over the last 2 months, it's actually the numbers have been rising. Looks like
Interesting.
volume has been growing. In fact, uh, there's actually there's an article here from 4 days ago saying that trading volumes on decentralized exchanges and protocols hit $32 billion over the last 7 days, as over the collapse of these
FTX.
centralized financial protocols. So DeFi is the big winner in the future here, and I'm going to spend a lot of time like, wow, the volume in the last 7 days and everything. Uh, DeFi growth is just phenomenal. It looks like. Uh, what can't DeFi do yet that CeFi can do? I guess the relationship between users like actual bank accounts and these DeFi protocols, you need more regulation to be able to do things like that,
Right.
right?
Correct. Yeah, I think the primary thing that DeFi is really bad at is basically getting real institutional adoption. The reason for that is because a large hedge fund or a large family office or a bank, they want someone to call if something goes wrong. Like it feels very foreign that they are just talking to a smart contract. So I think a lot of like the institutions we've spoken to, if they want to use Ribbon, it's like, who are they going to KYC? Like, are they going to KYC the contract? It
Yeah.
doesn't really make sense. So I think these things don't fit into their mental model right now. And I do think it'll take a bit of time, but we have seen like the more crypto native or the more adventurous institutions are sort of just winging it and getting into it because they know that's sort of where they have like a leg up over their competitors. But I do think it'll take a while before this becomes like actually mainstream or acceptable by every big bank.
Shit, we were just talking about this like earlier in the episode. Like just when the governments are about to figure out how to regulate Coinbases and CeFi, now CeFi is doing something completely different. Like
Right.
what FTX and the likes did versus what they were doing recently is completely different. It would almost be like a whole different type of licensing scheme. The shit moves too fast.
Right. Right.
So
Right.
I understand on the regulation side, it's like hard for them to figure this stuff out because it just moves too
Right.
fast, and they're gonna waste their time. And it's so I don't know. Some countries have done this like one-stop shop. If you do anything crypto, register with us because we don't know how to regulate this shit, but at least we can communicate with you. Maybe that's what the US government should do. Like, I don't know. I don't know the answer, but I know that you guys do want like clarification, right? Like someone said the other day, it's not just clarification, it's like good regulation too. So I don't know.
Right. Yeah, I think, this stuff is still very subjective. No one really has like a clear view on like there's so many interpretations of
Yeah.
what these things actually mean. And I think historically the easiest ways to actually understand what is good and what is bad is just through example. So I do think there'll be some heads that need to get chopped off, and maybe some others who are sort of a bit more blessed with the government's approval before we have a sense of like, okay, that's allowed but that's not allowed. And obviously it differs from every jurisdiction, so
Yeah.
these things really just change like all the time.
You so as we're getting towards the end of the show, first I want to say thank you so far. The information that you're giving us and the lessons that you're teaching us are great, and I hope people start to have like a continued uh, non-jadedness when it comes to DeFi because you guys are really going to be the clear winners in a year or two from now when we look back, and it actually the industry is looking to you to fill the holes and the vacuums that CeFi is leaving behind. So you definitely
Right.
have a hard job doing that. But I want to kind of wrap it up. A lot of my listeners are actually working at crypto companies. They are like you, university, and they're jumping to the next level. Maybe they're working at a different job and they want to work in crypto, or they're interested in it in general. Maybe they have. I've learned that the because crypto and Bitcoin moves so fast that you learn a lot more. You learn a lot of lessons, like positive and negative. Do you have any for my listeners? I mean, you launched Ribbon in a bear market, so that's a lesson right there. But do you
Right.
have any? What is something that you wish everyone knew?
Yeah, I think I read this on Twitter actually, so I'm just gonna steal it from someone else. But I think like the dumbest thing that people could do now is like quit at this point in time. I feel like even though the events of the last few weeks or even like this year, there've been so many massive blowups. Trust has been completely shattered in the space. But if you sort of take your hand off the pulse, or you go like change industries and do something else for a few years, you might just miss everything else that's happening. So I would say just stick to it. There's a lot of interesting stuff happening in crypto, not just in DeFi, but like NFTs, like social tokens, like games. There's really like something for everyone right now. So I do think it's probably I would strongly advise people to just stick around, get deep in the space, really learn as much as you can,
Yeah,
and hopefully there'll be a next cycle, or hopefully this stuff comes back at some point. But yeah, I think it's a very easy trap to just like leave and hopefully and
yeah.
try to come back in time.
In the last in the last bear market, I produced this movie with my wife. Like we needed something to do outside of crypto, so we made a romantic comedy together, and she's starring in it. That's her actually. It's streaming everywhere, Apple TV and Amazon, so everyone can go watch it. It's really funny,
Nice.
but I missed when I was doing that and living on set every day. It's like a 2 year project, a year and a half.
Nice.
I missed crypto. I missed this. One of the things I missed was uh, I missed knowing what I'm talking about and not having to
Mm,
like kind of make. I felt so uncomfortable in the film business because there was so much that I didn't know. I mean, and you don't know what you don't know. That's probably the
right.
biggest thing in life. It's like if you start to think that you know what you don't know, that's where you're going to fail because there's so much that we don't know. Still, I mean, oh my God, it's like life is like an onion, but everything is like that.
Right.
But at least in our industry, knock on wood, we kind of know what we don't know, at least when it comes to the technology itself, right? And
Right.
that's why I like math, to be honest. Like I find comfort in mathematics for that reason.
Yeah, I think
It's
that's
so
like good
nerdy.
advice. I mean, even if you don't have to be like glued to your screens for like the next 6 months, but you should still like try and keep sort of
Yeah.
your pulse on the space. But yeah, I mean, go produce a movie or do something else. I'm sure that's probably much more fun than watching screens all day.
Yeah, it's the screen watching all day is definitely the killer. But like you said, it's the time, especially in the industry, time is the biggest like value proposition. The longer you've been around, the longer your business and your company has been around, or your project, uh, the more like validation you have or like approval of existence. So don't go anywhere.
Right.
Don't go anywhere. Well,
Agreed.
thank you, Julian. I appreciate you taking the time today. How can my listeners kind of follow you? We'll have all your links and everything in the show notes, but
Yeah, I would say the best place to keep in touch with what we're working on is Twitter. So twitter.com/ribbonfinance. And yeah, all the helpful links are there. So thank you for having me on as well.
I'll see you later. Have a great night.